Hey, Mep here, Mep Investments, bringing you today's stock news and economic news. Today, the Dow Jones was up 103, picked up some steam in the later part of the day. It was just fluctuating between pretty much unchanged, and as the day progressed, it bumped up to 32,808, and then I think that was the high, 32,810, and backed off to 32,731. The S&P was up about 40 handles at least. Hit 39.55 and gave back some up to 39.40. And the Nasdaq was the biggest one of them all today, up 1.23. Small caps were down. They've been showing some cracks lately. There's a small cap. They were down 20. At one point, they were able to battle back, and they were down about 5 or 6, not my mistake, and they almost got to unchanged. But then they gave up the the gains that they were clawing back to get to unchanged, and ended up down 20. And they've been showing some weakness. The bonds cooperated today, but I think it's just temporary. This is probably going to show you, this is going to show you what's actually occurring. But during the trading session, excuse me, yields were down in the long end. The 10-year and 30-year were down. And now after hours in the future markets, they trade 23, 5 days a week. They close at 5 and open up again at 6. And they only close Friday after the bell, and then Saturday, and they open up Sunday at 6. Right now, the rates are heading back up, so bonds are selling off a little bit. Let's go take a look at the futures. So let's take a look at the dollar. The dollar is up a little bit on the 92 handle, and all the currencies are down. Bitcoin is under some pressure. Jerome Powell today, let me see if I can find it handy, talked about Bitcoin today, saying that it's not, says Bitcoin is more of a substitute for gold than the dollar. For gold than the dollar. Powell calls cryptocurrencies not really useful stores of value and says the Fed will move slowly. Fed Powell says crypto is substitute for gold, not the US dollar. So Jerome Powell was talking a little bit about crypto, and they were under pressure today. Bitcoin is down almost 1,000 as we speak. Look like we got some moves there all of a sudden. The dollar's perking up. Oil at 61.16, down 40 cents. It had hit a high of 67 last week, and the low was 58 and change, low 58s. I think oil will claw back with all the reopening, and I look for oil to go higher. Also, as the dollar, I think I look for the dollar to weaken. Right now, the dollar's holding steady. So, but I think there's too many macro. What's the word I'm looking for? Macro plays, I guess, in place in regards to the money printing and the deficits that the government's running. It's just not, it's not a plus for the dollar, in my opinion. Gold is hanging steady at 1735. It's been between, last week it was between 1750 and probably like 17, 15 more or less been in a trading range. But I think we're going to see a nice leg up higher here in the future. Copper holding 14.15, and lumber 9.25. It's pretty up there. I don't know, the contract rolled to a new month. Small caps are up a little bit after hours. The S&P is pretty flat. The Nasdaq just went negative, down 13. Dow Jones up 30. The Nikkei is up 80 here on this thing. I would have to look at but here the future's up 80 or 55. It just moved. Palladium and platinum pretty flat. Natural gas had a little bit of bump today to 257. I think it's a little undervalued. I have some UNG calls, so hopefully I'm right there. The grains are pretty flat. The VIX got hit pretty hard today. We got a little bit of green here right now in the VIX, the fear gauge. And bonds are I touched on bonds on the other on the CNBC app. Bonds are down, and when bonds are down, rates go up. So the 10-year and 30-year are down, so rates are up. I think that you stick with, not saying to ignore tech, but I think you stick with Kramer. I happen to agree with Kramer. He was talking today. Let me look at some of the news here. He was saying, says cyclical stocks are worth buying after Monday's dip. And I have to agree. There was a list here. I could have sworn I saw a list. Oh, they took it away. So he highlighted these names. John Deere. I love John Deere. I think ag stuff's going to go higher, and there's just not a lot of people making ag equipment, and John Deere's bought back a lot of stock. He was talking on his show that there's a scarcity of their stock, so that'll cause the stock price to go higher as people buy that sector. There was merger news today. I think a couple of the railroads merged. I can't remember which one it was. It was can't remember. I'd have to look it up. I don't remember which one it was. I think it was Kansas City, Southern. I like Caterpillar. I own Caterpillar. I don't have any of the railroads. And he talked about Ford, like Ford, General Motors, even though there's chip shortages to make these cars. I would, here, he mentioned some of them. Here's Ford, GM. I like those. He mentioned Nucor. Nucor is good. I have United Steel, letter X. I have that, and I have also Cliff. I think these are. I think in my opinion, I think these stocks are gonna be the next market leader, because I think interest rates are gonna go higher. Because I think we're underestimating the inflation that's coming. So these companies can pass on costs to the consumers, and it's harder for tech to do that. And also, when you have higher interest rates, it's higher borrowing costs and stuff like that for these growth companies that are not even profitable. So I like what Kramer was saying there, and I think that you buy the dip and you kind of be a little bit defensive on the tech side. You see here, chip shortages has some automakers struggling to maintain truck production and meet orders. You can play the chips through SMH. I've said that in my prior videos. So that's what I see. I wasn't really active today. Let's go to my orders. Didn't do much today. Closed the future NASDAQ here and small cap, made a profit. Closed the calendar here for Mosaic, probably even. Copen, I bought back the puts for 50%, closed that out. I closed out DraftKings put that I sold for 50% when it was up. What's this? Oh, this is soybeans. I closed the soybean order for a little profit. eBay, Switch, LiveX, sold those for a profit. TME, I sold that for a profit because I had earnings tonight. I'll reevaluate it again after I look at the earnings. Ford, I closed and I did a calendar when it was up and then it went back down. So I've been playing Ford like that. I did a little calendar on it. Airbnb, I closed for a nice gain. ASCE, I closed for a nice gain. XRT, I closed for about 20% what you expect in a calendar. GM was down out of the gate like $2. So I did a calendar. Let's see what it closed at. Down $1.72. Snap was down big today. Early in the morning. It only ended up down 20 cents. I did a put credit spread. I sold the 55 and bought the 50 for $1.77 on Snap. Ebon, I closed a call that was not much meat left in it, profitable there. Pinterest, I did a put credit spread. It was down to like low 70, and I hit a low of 70.11. It was down like $2 when I did the trade, and I sold the 70.65 for $2. Put credit spread. That one and Snap are up a little bit. Here's the calendar in Ford. I bought a call in Gap, a retailer. They're opening some stores and they're opening a new online warehouse to sell stuff. I think they have some good things going there. I think the street, let me see what it finished. It was down like $1 something. Down 79 cents. Costco, I did a put credit spread in Costco, the 330, 320 for $3. Not as much as I wanted to collect, but there's not a lot of premium in there. But I think Costco is in an uptrend. I think Costco should go back up. It was up 1.7% today. And if you look at the chart, they can get past 335 with some good volume. Tomorrow, I think it'll head up to 350 easy. I think Costco is a good one. Did that one. I'm being really, really picky, guys, with my trades. FXI, I closed this out. They actually assigned me the calls, so I closed that out for a small loss, very tiny. Gold, I sold the near contract because I had to close it out for a little gain. Facebook, I did a broken wing butterfly in Facebook. Out in April 30th. So about 40, let's see how many days. 39 days out. I think Facebook was almost to 300 today. Yeah, 299. And I was like, let me sell something here to the upside. So what I did here was I sold the 230 call, bought two of the 235s, and sold one of the 245s for a credit of 450. It's called a broken wing butterfly. Pretty much at the expected move. Expected move, I think, was 30. 30. Yeah, exactly 30. Right here, 30. So 30 plus 300, it puts it at 330. 230. Sorry, 230. Sorry. So that's more or less where my trade's at. And there's many ways to make money on this trade. This trade I'll have to wait till the end, so I'll keep you updated on this trade. If it don't make it up there, then I keep my $450 credit. That's the trade I did there. This was a short of the NASDAQ later in the day when it was up like 300. Still have that position. I did a put credit spread in Nautilus. It's been pretty beat up with Peloton. Took a shot here. Sold the 17.5, 15 put credit spread for $1.17. Hopefully I can buy it back on a bounce. I sold the 30-year bond. I made a mistake. I actually traded from my phone today. I hardly never trade from my phone, but I traded from my phone today. I made a mistake doing a call credit spread on the 30-year bond. So I closed it and then redid it, and I eventually did it right. I sold the call credit spread because I think ZB will go down. I think rates will go higher. I shorted the S&P when it was at over 350, and I closed MP on the bump today for like almost 50%. So those are my trades today. And just being very, very finicky with my positioning. And I got a feeling we're going to see a big move. Also, I don't like that the VIX is at, the VIX is almost, I think it's under 20. Yeah, the VIX is at 18, you know? So either we grind higher little by little and the VIX and the fear just keeps falling. And then, summer's almost here and then it gets a little bit ugly and it's tougher. Or, I just don't want to be too invested with a VIX of 18. I don't foresee us getting down to a VIX of 10 like we've had in the past. I think historical average might be 15. I have to do more research on that, but I want to say that's the historical VIX, more or less 15. Might be wrong. Don't hold my feet to the fire on that. But the market might be getting a little complacent here with the VIX at 18, in my opinion. The trends, I think that we're getting a dead cat bounce on the dollar. I don't see the dollar maintaining this value. I see oil higher. I see most commodities higher. The dollar lower. And I think the Dow Jones will outperform just for the simple fact that they have the banks and stuff like that. More of the financial sectors in there, in the Dow 30. I think that will outperform the NASDAQ and the possibly S&P, because a lot of the S&P has a lot of correlation to a lot of the big tech names are in there. I think the Dow Jones might outperform. Small caps are kind of iffy right now. Got to keep an eye on them. And like the metals, you guys know how I like to play Bitcoin and the cryptos through PayPal and Square. Let's take a look at what PayPal and Square did today. I still have my positions there in them. PayPal was up 3. And Square is up 129. So yeah, that's the way I like to play those crypto names. I like the ags. I have John Deere and I have Mosaic as a play in the ag space. And I like interest rates to go higher. So I have a lot of calls in the XLF. The 35 strike, the March ones expired. I got the Aprils. So hopefully the XLF can get a bump here. I think I pretty much covered it all. Just gotta, we hit the. Oh, there was one more thing I wanted to talk about was housing. So we had existing home sales dropped 6.6 in February. It's a pretty big drop. Existing home sales fell sharply in February as supply declined at a record pace. So they're saying that the sales fell because there's no supply. It'll be interesting to see what happens to real estate here in the next, I want to say next year, because, we're reopening, people are getting the stimulus, people are still getting the unemployment benefits. They signed up and they're extended through through September, October. They're getting the 300 federal aid and whatever the state provides to September, October. I want to say it was October that they're extended it. So I think real estate, we'll see more of the real estate story in the next year. Is my after the holidays, we'll see more of what the price trends are gonna do. I think it'll be a lot. My area is doing well. The Miami area, the Florida area is doing pretty well. A lot of exodus from New York, as well as Texas from California, for friendlier state taxes. But interest rates climbing should be a hamper on that, and we'll see how these interest rates play out, unless the Fed steps in and tries to do yield control. And that would be another name for Operation Twist Part 17. I don't know how many they've done, where they sell more of the short end stuff and buy the long end to drive down the long end, down the rates. So we may see that. If they do that, there might be some printing entailed. So that's bullish for metals and commodities. So that's what I got. I've been pretty still. No real big. It's just been steady. So be careful out there. I think the VIX at 18 is a telling story. Hopefully we get more volatility. Volatility is friendly for a guy like me who does options and derivatives. I really don't like buying options. I like selling them. And right now, as the VIX drops, it's tough because the premiums are drying up, so the options aren't that expensive. You need high volatility for higher option prices. That's good for a net seller of options. So I'm pretty heavy in cash right now. I wish I wasn't. And just looking for opportunities on a daily basis. The best ones I saw today were, to be honest with you, were Snap and Pinterest while looking at the tape all day. Those are the only ones that caught my eye. And as a long-term play, I like the Deere, Mosaic. I keep repeating myself. I like the gold miners. You get exposure through the GDXJ. I think interest rates are going to go higher. I wouldn't go in particular to banks. Maybe you could play it through the XLF. Healthcare should be fine. You want to do some biotechs, maybe do the XBI. And that's how I would play it, and just wait for a sell-off. I think we'll get one, even though we're getting stimulus and stuff. People might be saving the money or spending it. I don't know. I don't really think it's all gonna come to the stock market. But sometimes you gotta be patient, and we'll see what happens. Anyways, that's today's recap. Like the video, share it, subscribe, hit that notification button, and I'll catch you in the next video. Have a good night.